There was a time when the IPOs were used to fund capex plans of companies for their growth, expansion, but that priority seems to have changed over the last year or two. Now, we have taken a list of IPOs that came out starting 2022 till date, and there are a total of 75 such IPOs. Now, out of them, 14 IPOs are purely an offer for sale, so they are not taken into consideration because the company does not receive any money through that. Now, these 75 IPOs have raised over 91,000 crore rupees, of which almost 60,000 crore is through the offer for sale mechanism, while the rest comes from the fresh issue of shares. Now, this number is also skewed because of large IPOs like LIC. They had a 21,000 crore IPO which was entirely an offer for sale. So, the number is skewed. Now, when we come to the remaining 61 IPOs, which were either a pure fresh issue of shares or a combination of a fresh issue and an offer for sale. Now, even in those 61 IPOs, 1/3 of them have the offer for sale component to be higher than the fresh issue, and the major highlight is that out of those 61 IPOs that we are considering, almost 90%, or which is 54 such companies, have highlighted that they are using the IPO proceeds, at least part of them, to repay debt or to fund working capital requirements, and 38 of those companies are using the proceeds for capital expansion or for acquisitions or inorganic growth. Now, coming to the 7 companies that did not use their proceeds to repay debt, and that includes companies like Delivery, Radiant Cash Management, Global Surfaces, SBFC Finance, and the recent listings like Rishabh Instruments and Yatra Online. So, these are the 75 IPOs that we have analyzed so far starting 2022. The primary objective is to reduce debt, and there are more lined up for the rest of the year as well. So, let's see what that brings in for the shareholders going forward.